What the heck is going on in the Tampa Bay real estate market? Hey, it's Sean Reddy, Keller Williams Reddy Group, and each and every month bring you the Tampa Bay market in a minute. Spoiler alert, gonna go a little longer than a minute talking about what's going on in the Tampa Bay market between Hillsborough and Pinellas Counties. We look at this every single month. We take a look at month over month, we take a look at year over year, and then we expand it out into a longer time horizon so we can get a little bit more perspective on what it all means. And if you've never seen this before, basically the whole point is if you are in the market or plan on entering the market as a buyer, as a seller, doing both at the same time, the goal is to use this data to your advantage so that you can capitalize on the market and make the best move for you. And stay tuned till the end. We'll talk about exactly how to do that. But first, let's look at month over month for March 2026. We're comparing it to February and some previous months. We'll look at year over year and then again, expand that a little bit further. So first things first, color coding. If there's 9 key metrics that we're looking at here, they're on the left-hand side. It's average and median days on market. It's new listings, it's available homes, it's new purchase contracts, closed sales, average and median price. And then finally, what I call the leverage factor. It's the median sold price to list price ratio. Essentially tells us who holds the upper hand in contract negotiations once a home reaches the price that actually causes it to sell. So 9 metrics, and they are color coded. If they moved in favor of buyers, they are colored in red. If they moved in favor of sellers, they are colored in green. If they didn't move, they're in yellow. Last month, banner month for seller favoring swings, with 8 of 9 moving towards, I'm not going to call it seller's market territory, but moving in favor of sellers. And this month, it went back to evening out. In fact, a little bit more buyer favoring in the month of March. So let's talk about that. Break it down starting with the biggest mover is closed sales going up 36%. And that's, to me, is kind of astounding because last month, when these closed sales went under contract, contracts only jumped by 2.7%. However, there must have been some lag because January contracts had an explosion month going up by 42% compared to December. All in all, it's 3 straight months of increased purchase contract activity with 2 straight months of closed sales activity. Now, purchase contracts, again, 3 straight months. This month went up 14.9, we'll just call it 15%. The other green metric is available homes. Now, this one's a little head scratching, but available homes down 1.4%. Not a big move, yet a reduction in inventory when we saw a 12% increase in new listings. So I guess the purchase contracts taking homes off the market did outweigh the new listing increase enough to pull the overall inventory level down a little bit. Now, how fast do these homes go under contract? On average, 71 days, the median 35. 71 remained exactly the same as last month, whereas the median went up by 1 day or 3%. Now, this is interesting, scrolling down to average and median price, both down month over month after increases last month. But the average price took a 6.3% bath compared to last month. Now, I'm going to caveat that. That doesn't mean that the sky's falling, values are plummeting. That means that all the homes that sold, the 3,401 that sold in March, the average was 6.3% less than the previous month. Stay tuned. We'll take a look at year over year to see how that stacks up. Median price down 2.5%. Finally, that leverage factor I talked about, down slightly. It's 0.07% down. That means that the median sold price compared to the median final asking price was 97.52%. Or, to put it another way, buyers took a median of 2.5% off the final asking price. So it's not a big gap, but it's slightly down trajectory. It actually matches that of January. All right, so let's look at year over year here. See how this stacks up compared to last year. Now we're seeing a little bit more seller tilting trend lines here with, let's see, average price, big one, up 11% year over year. Now again, we're looking at this in a vacuum. Last year there were 3,100, 3,200 sales, 3,400 this year. So it's just taking a look at those 32, which the average at that point, 492. The average this year, 546. The median, this is probably more indicative of overall trend lines on home values, up 0.003%, or mathematically $10. So we're kind of in this stagnation period in terms of home values. Don't expect that to change anytime soon. We'll talk about that. Market times. It takes roughly a quarter longer, 25% longer to sell a home this year, at least in March, than it did last year. However, check it out. New listings down 10%. That's not insignificant because we've been seeing dramatic increases over the last few years in both new listings and total inventory or available homes. Available homes down 5%. Purchase contracts up 2.5%. So when you have 10% less new listings and 2.5% more homes coming off the market by way of going under contract, that is going to reduce inventory levels. So less homes on the market this year than there were last year. Finally, leverage factor, aka median sold price to list price, down 0.2%. Now, expanding out, last segment here. Let's see what this looks like for my graphic visual people over the course of about 3.5 years. First graph here, we got average and median days on market. You can see the overall trajectory is upward with some peaks and troughs here and there, particularly in the storm-torn October 2024 month. But save for that month, it's pretty much, you can see, this just upward trajectory with longer market times. However, we get into, December of just this past December of 25, longest on this short, 3.5 year record at 53 median days, and then straight down a cliff to 34, now 35 last month. Let's see if that trend holds. Let's see if homes are going under contract faster, either a more decisive buyer population and or combined with home sellers and agents understanding the strategy behind pricing a little bit better. And I think that's the most PC way to say that. Okay, next graph, a little bit more complex. 3 metrics. We have total available homes in the red, and you can see where that's been and where it's gone and going. Just primarily upwards, except we just talked about how that's, it's been coming down slightly. I'm not even going to say slightly. It's come down pretty significantly since April, May last year when it topped out at close to 16,000 homes on the market. However, new listings, flat. Purchase contracts, flat. You can see some peaks and valleys, but the overall trajectory of those lines are pretty straight line. So the main takeaway here, look at the red, look at the yellow. The wider the gap is in between, the slower it is going to feel if you are a home seller who's not priced to cause buyers to act. Because 14,000 homes on the market, 3,500, 4,000 of them going under contract at any given time. Plus you have new competition entering the market all the time. Plus you have competing homes enticing buyers by reducing prices. It's going to feel slow if you are in no man's land, like super slow. And you're going to say, oh, the market sucks. The buyers suck. My agent sucks. I can't sell my home. No, homes are still going under contract. You're just sitting here in this kind of no man's land. So the tighter that becomes, example, spring of 2023, that's when it felt like a frenzy last. And we'll get back to markets like that in maybe years. However, just understand that gap is what makes it feel slow if you are an overpriced seller. Screw the PC. All right, closed sales. Ups and downs, relatively flat. Kind of averaging out in that 33,000, 3,200-ish range. 3,400 last month, 2 straight months of increases. We'll see if that continues to play on. I suspect it will because of the increase in purchase contracts. Now, finally, average and median price. And let's look at the median in the red. Just flat line. Average, peaks and valleys, a couple of huge jumps, particularly in the late part of last year, early part of this year. But that average is always influenced by the big numbers, right? So if you have a couple of, $10, $15 million sales, that's going to pull those numbers up. And we're seeing it kind of, revert back to the mean, so to speak. And I suspect we'll continue to see average prices somewhere in the low fives and median prices somewhere around 400 for some time to come. There's not really any headwinds or tailwinds to push pricing in either direction, really. I mean, if anything, I would say maybe down a couple percent this year, but I don't see too much of a compelling data points to push it up. Lastly, median sold price to list price ratio. Generally going to fall somewhere in the 97 to 100 range. You can see there was a couple months on here where it was exactly 100, but that's only 2 out of 36 with 40 some months. Right in that 97.5% range right now. Probably will continue to stay there. So, wrapping up, there you have it. How to use this data. Excuse me. Again, if you are in the market or plan on entering the market, you want to make sure you are partnered with somebody who understands this data at a high level like this and can walk through it like this. This is big picture geographically, where we're looking at both Hillsborough and Pinellas Counties combined. Obviously, lots and lots of properties. This does include every single type of residential property here. You want this pinpointed and tailored to your specific goals. Whether you're selling a home, independent of buying one, whether you're buying a home, independent of selling one, or you're doing both at the same time to upsize, downsize, cross size, right size, whatever the case may be, get with somebody who can put this data together for your specific area, whether that's your city, your town, your suburb, your neighborhood, whatever the case may be. Happy to do it for you if you don't have that person, and happy to be a resource, because this data can literally save you tens and tens of thousands of dollars in a real estate transaction if you know how to use it. So there you have it. Again, thanks so much for watching Tampa Bay Market in a Minute. And we'll be back to do this every single month, as we've been doing for years and years. And again, Sean Reddy, Keller Williams Reddy Group. Make sure to like and subscribe, and we'll see you next month.